Two things ICT traders love to do is overcomplicate things, one, and two, make fun of people who manage to trade profitably without overcomplicating things. So in this video, I'd like to just go through the two trades I took yesterday on the NASDAQ and show you that simple trend and market structure with a volume range profile is sometimes all you need, and you don't need to complicate it any more than that. So these were the two trades I took. Where the way I have them drawn out here, them might seem a little bit messy, and you can't really see why, but I will explain why I took them. Okay, so let me just go to another time frame here. So my system is very much structure and trend focused. I have this indicator that I built myself that basically just shows me the trend, I like to say. Obviously, this one changes from time frame to time frame, but that's what makes it so great, in my opinion. It's that when the market is trending, you don't always know how fast it's trending, like how violent the move is. But with this indicator, I'm able to see actually at what pace the market is going, right? So if I look at the 30-second chart, for example, you'll see that yesterday, this one, the cloud here was not really respected, right? You couldn't really get any useful signals from it because we kept not respecting it. If we instead look at the 2-minute chart, you can see that the pacing of the market was fitting the 2-minute time frame with this trend. You can see how well it was respected just before the market opened and during. I had one small deviation here. Otherwise, it was very well respected. So that was my first trigger. It was, all right, the market is trending on the 2-minute trend today. We're at all-time highs, like everything is going up. All you can really do in a situation like that is try to jump on the trend. And again, this indicator makes that really easy for me, okay? So that was the first thing. We're trending on the 2-minute, right? Next thing is, okay, we're starting to build some value up here. So I drew out this fixed range volume profile to just kind of visualize that for me. And when we bounced from this fair value gap inside the 2-minute trend, let me now zoom into the 30-second because that's actually the time frame I executed on. So 2-minute was to find the area of interest, which happened to be that trend, and the 30-second was where I actually executed the trade. So this is the fair value gap from before. Okay, I'm just going to remove that. We know that's an area of interest. And then what we had was like a huge sweep. Obvious huge demand, right? Because price after we swept here just got bought right back up, and we kind of broke the structure. So that was actually the trigger, was that this was the high that led to the low that ended up getting swept. You could also say this was the high that led to the sweep. Either one is fine, and this candle after the sweep that closed up here and reaccepted back into value. So this was like the value area that we had built, the range. We lost it and we reaccepted back into it. Now, classic auction market theory is that when you reaccept back into value, then you go to the other end of said value, right? So that was it. Closed up here, reaccepted back into value. I really liked the momentum of this candle. Jumped in here, 10-point stop, and I actually just targeted the other end of the range. These two wicks in this fair value gap, like this whole area just looked juicy. Got out there, not sure what happened afterwards here, but this is where I took profit. Then from there, I did nothing and waited. At this point, the value area was not really defined enough that I would have taken like trades from the range low. It was only because we reaccepted back into it. But when we got later into the session, I had the exact same thing going for me again, right? I still had the 2-minute trending and holding us, right? So I had an idea more that was like, okay, well, this is obviously a range now. It was a bit speculative with the first trade, but the second trade, it's obvious that we are respecting the range lows and we're respecting the range highs, right? So again, confluence, 2-minute trend that we're still trending on, confluent with this little mini value area range that was being built out right here. That meant that I was confident. It moved a bit. Why did it move? That I was confident enough in this range holding, right? So I actually just, as soon as I saw a tap here and these candles were kind of wicky, swept this and was kind of wicky. You could see that there was some demand, some absorption going on here. That's when I jumped in. And again, I just targeted the other side of the range. I mean, this one I could have held for more, but at this point, there was no reason for me to think that we were going higher. So 2 for 2 on the day, super simple, basic EMAs and a range. I just realized that my camera's frozen, but that is what it is. I mean, I guess you don't have to see me to understand what I'm talking about. So yeah, 2 for 2, 2 range trades. It doesn't have to be complicated. I mean, EMAs and a range is sometimes all you need, right? You don't need all of that fancy speculative crap that they're talking about all the time. So those are the trades I took. If you want me to go in depth with any of the concepts, let me know in the comments below. I'll be happy to do that for you. All right, see you in the next one.